So friends, we have with us our domain expert on registration, Mr. Ravi B. Sehgal. He is Senior Chartered Accountant, SK Mittal and Company Chartered Accountants. Mr. Sehgal is a Chartered Accountant with rich industry experience. He has worked with Steel Authority of India Limited for 37 years, an MBA Finance from Faculty of Management Studies, Delhi. He is presently working with Mrs. SK Mittal and Company. He has experience in income tax, GST, RBI, MCA, and other statutory related services. Over to you, sir, for the registration policy, sir.
Thank you, Priyaji. Good afternoon, participants. Welcome to all of you. And to begin with, let me thank the organizers for giving me this opportunity to share my thoughts, share my experience with all of you. And I'm sure it will be definitely of use to all of you. So friends, we have all decided that we will get into a business, and then when we get into the business, there are certain legal commercial compliances which are required to be done, which is officially termed as registration of a business. And though it may sound very something very difficult to be done, but let me start with a assurance to all of you that after the things have become online, most of the thing documentation is done online. You need not visit from door to door or from office to office to get your business registered. Things are very easy, and once you open the form, you will find that the registration is so simple when you want to start a business. So when we want to start a business, I will first deal with certain conceptual matters. And when I'm talking about conceptual matters, I would request you to be slightly carefully listening to the basic fundamentals. Basic fundamentals of registrations are: what is registration? We want to get ourselves known to the world, to the government, to the administration, to the business partners that I am starting a business. So when I'm starting a business or we are starting a business, they would like to know first of all who am I or who we are. So uh, you would have sometime gone definitely for making your driving license or for your voter ID card or Aadhaar card. So what happens? Actually, that is also a registration. Voters card is a registration of voters. So what do they ask for? They will ask you for a photograph. They will ask you for a proof of your address and identity proof. So similarly, whenever we are going to for any registration, they would definitely say that bring your documents to establish that what you are telling you are. Which is known as properly known as KYC document, that is know your customers. Know your customer means the, the entity with which you are registering, they want to know who you are. So what are the primary KYC documents? It is your ID proof. It can be Aadhaar card, it can be voter ID card, it can be driving license. So what is your some second is your address proof. The address proof can be in terms of the house in which you live. You have a lease agreement, or if the house is owned by you, then you have ownership document. In case you want to do business in third parties premises, then there should be no objection from the person from whom you have hired the premises, that he has no objection in doing business from the premises which you have taken on hire. Suppose you have taken a premises for residential purpose and you want to do business from there, it is not acceptable. So you should have permission from the landlord saying that you want to register for you want to go for a business, and the landlord does not have any objection in starting a business in the hired premises. So you have your ID proof, you have your address proof, and next is photograph. Then there is, in the today's world, there is something called digital signature. When you will file various documents online, there's sometimes an opportunity not to put a physical signature. While the government has facilitated in most of the places that Aadhaar based OTP is sufficient to replace your signature, and it is happening in various forums. But in certain places, you will find that they will ask you to put your digital signature. Digital signature is nothing but uh, a signature in your pen drive. Once this pen drive is attached to your computer and it is authenticated by again an OTP, your electronic signatures are put on the document, and it is as good as your physical signing of the documents. So these are the basic tools which you should have to start any process of registration. And I'm assuring you, as we go forward, you will see there is nothing much beyond this which is required for doing a registration. So when we want to start the business, we can be doing alone. It can be a family business. We may be some friends and family members joining the business in form of a partnership firm. It can be a limited liability partnership. We'll talk about this as we go. And if in case you want to go for a higher investments, then private limited company and public limited company are the next forms of business which you can enter into. So we'll deal with all of them one by one. Give me a minute. So, to start with, we will talk about sole proprietorship. Now, sole proprietorship is, as the name says, sole is one single person proprietor who is the owner of the business. So, I want to start a business at my own. I want to put my own investment. I want to take my own decisions. I want to be responsible for all the risk and rewards which will be required for the business. I want to control and manage the business. So I want to start a business as a sole proprietor. Now, this is very suitable for a small business where the personalized kind of services are required. In our day-to-day life, we see most of the businesses happening in as a sole proprietorship. You go to a grocery shop, a medical store, a photocopy shop, or even a vegetable vendor. All these forms of businesses are normally operating as a sole proprietorship, in which the single person is making his own investment. He is controlling the business. He is taking the decisions what to buy, what to sell, and he is responsible for whatever profits he earns or whatever losses that happens. Now, at this stage, I want to deal with a concept of liability, which is called unlimited liability. Now, what is this liability concept? It can be unlimited liability or it can be limited liability. In most of the businesses where we are individually involved, the liability of the business is unlimited. Let me explain to you with an example. Suppose you have 10 lakh rupees in your bank account, but you want to start business with rupees 1 lakh. So what you do is you put this money into a separate bank account and want to start business. You want to buy material out of this. Uh, you want to hire people, pay salary. You want to pay rent out of this, and then buying and selling, whatever selling proceeds they go to this account. So this 1 lakh rupees you have put earmarked separately. Now, you have decided that balance 9 lakh I want to keep for my exigencies. I do not want to invest in the business. But in case of unlimited liability, what happens is that suppose for some reason, God forbidden, you earn a loss and you do not have sufficient money to pay your creditors. For example, let me take another example. Suppose you have opened a dairy business, Amul dairy franchisee you get, and you have stored material worth about 1 lakh from the by taking buying from the Amul dairy company, and after that, for some unforeseen reasons, the shop is not. It can be complete lockdown where nothing is allowed to be operated, or you are not well, you are not able to go to the shop, or some other reason. So what happens? All the goods which you have stored in the in your shop, they are all perishable goods. So in case you are not able to go, the goods will get perished, or you will ask somebody that please dispose of these goods at whatever prices are available. So there may be loss in disposing of those commodities. So, but you have bought it for 1 lakh, you thought it will be sold for 1.25 lakhs. Out of 0.25 lakh of earning, you will be paying the, you will be, you will be,
Mr. Arif, please mute yourself.
so you will be paying salary of the your employees. You will be paying rent. So you will have no money to pay salary of the employees. You will have no money to pay the rent. So in this case of unlimited liability, you will have to bring money out of your 9 lakh rupees of saving. So whatever liability is there, you have to personally discharge even out of the savings. That is the concept of unlimited liability. But in some kind of businesses, you will find as we go forward, the liability is limited. In that case, your personal savings are not affected. Whatever you invested in the business, that is all you are required to uh, use for the paying of payment of liabilities. Now, how to start this business? First of all, you have to make a notarized declaration that I want to operate in the name of, say, Agrawal Sweets, located at such and such premises, and I will be doing business of, sweets, namkeens, etc. And I'll be the owner. This is the address. So this kind of declaration you will have to create and get it notarized, and this document will be required to be uploaded at various places for registration. So this is the first kind of document which you have to create. The second is a registration under MSME, medium and micro, small and medium enterprises. So this is a law which has been introduced by the Government of India to help the small businesses to start as a Atmanirbhar, as a self-independent businesses, and government renders substantial help in strengthening of this business, in contributing loans at a lower rate of interest, and various kind of contributions, grants are given by the government if you are registered with MSME. So there are, if you are having a capital investment of less than 1 crore, it is covered under micro. If it is 1 to 5 crore, it is small, and if it is 5 to 10 crore, it is medium enterprises. There are protection, various kind of protections available to medium, small, and medium enterprises. They are in terms of, suppose you have given goods to somebody and the person is not paying you. There is a lot of protection with the government that they are bound to pay money to you, and they are required to pay along with the interest. In case of large enterprises, companies, they are required to get it certified from their chartered accountant that all the money due to MSME organizations have been discharged in 45 days. So these kind of advantages are available. The registration process is very simple. You go to the MSME website. You have to fill up simple name, address. In case you are registered with GST, that is optional. That you should have an Aadhaar, and there should be a mobile number available with you. Once you complete the application, a Aadhaar OTP will be given to you, and once you file the OTP, the form is submitted, and you are issued a online certificate immediately. There is no physical certificate given to you. And please take it for granted, once the certificate is available, it is a bona fide document of registration of your organization. It will contain what kind of business you are into, what are you dealing with. I think other than trading, everything is covered to be registered under MSME. So it is a great benefit. All of you who want to start an enterprise must get registered themselves by MSME. It is simple registration form. Once again, I'm telling. So now, as I explained to you, you have 10 lakh rupees in your savings account, but you want to invest only 1 lakh rupees for the business. So for starting any business, you have to open a separate current account. You cannot operate from your savings account directly. So you have to approach a bank for opening a separate current account for starting the business. And this business, again, most of the private banks, I'm sure, are giving facility to open a current account online basis. You go to the bank site, fill up the form, attach the KYC documents, and submit. The bank representative will examine the documents. In case any further queries are there, they will get in touch with you. And otherwise, within 1 or 2 days, you will get the bank account number and where there you can transfer the proceeds which you want to start business with. And I am sure now many public sector organizations, I am sure State Bank of India, the largest public sector bank, has also started facility of opening a online bank account. The next kind of registration is required is the shops and establishment registration. This is required to be registered with the state administration. Now the state wants to know when you start a shop or establishment, they want to know that what is the name of your business, where are you registered, which is your address of business, on what all days or what are the weekly days you will be working, what will be your weekly off, how many people you are employing, then what are your business hours. All these documents are, all this information is required to be submitted online to the respective state government. Once you submit the documents, I think within 2 to 3 days after paying a small registration fee, you get the registration online. And this registration document is required to be displayed at your shop and establishment that you are registered under shops and establishment. It is a mandatory registration, is compulsory to be obtained within 30 days of starting of your business. Now this we have talked about certain registration processes. Now next comes to the PAN registration. Now PAN is what? It is permanent account number with the Income Tax Department of India. So whenever you are earning any income in India, you are required to pay tax. The threshold limits are, let me share with you. If you are earning an income of up to rupees 2,50,000 rupees, then no tax is required to be paid in India. But in case your income is between rupees 2,50,000 to rupees 5 lakh, even though the tax is worked out, but a rebate equivalent to the tax is given to you under section 87A. So it means effectively you are not required to pay any tax, but you are required to file your return of income saying that this is my income, this is the tax worked out on that, and under section 87A I am getting the rebate for the full amount of tax. So I am paying no tax. So when you have to file your return of income, you are required to have a account number with the Income Tax Department. So what is that account number? It is called permanent account number. So for that, you are required to file a PAN application with the Income Tax Department. For that, what you have to do is, you have to again go to Income Tax Department website. They have created a new website, very simple. And now under this site, you have to look for the link for registration of PAN application. And you have to again submit the KYC document, your name, your address, photograph, place of business you will operate, under what name of business you will operate, and submit. Before submitting, you are also required to pay a small fee of about 60 rupees, 65 rupees. And the application is submitted. You have to take a printout of this application in this case, not in another case as I've discussed earlier, and send it by registered post or deliver it by hand with the Income Tax Department at the address given in the application. Once you are given that, within 7 to 15 days, you will get a PAN card, and this PAN card will be a sole proof that you are registered with the Income Tax Department. Now the next registration is, when I'm discussing the income tax, let me discuss tax return at source also. Now tax return at source is normally not applicable to a sole proprietor, that is a single business person. In case your total turnover is above 1 crore or 2 crore and your accounts are required to be audited by a third party independent auditor, only then this TDS requirement is there for sole proprietorship. But in case of other type of businesses, the TDS is applicable. Let me tell you what is this TDS or tax deducted source. See, the government is of the belief that the tax should be paid to the government as you earn income. So when you are earning income, a portion of tax at a rate specified by the government for the different type of income is required to be deducted by the person who is giving you that income. And he is supposed to deposit this amount on your behalf in your PAN number with the Income Tax Department directly. So the government gets its share of income as you have earned the income. So let me give you an example. Suppose you have hired a services of a chartered accountant. So, and you are required to pay him a fee of rupees, say 50,000 rupees. Now, in case the amount paid in a single case is more than 30,000 rupees, or the total amount to be paid during the year is more than 1 lakh rupees, then a specified rate of tax, say 10%, will be deducted before the 50,000 rupees is paid to me, the chartered accountant. So you are effectively paying 45,000 rupees to the chartered accountant, and 5,000 rupees you are depositing on behalf of the chartered accountant with the government of India under his PAN number, which will be credited to his income tax account. So, but when you have to deposit this, you have to file a return that from whom how much money you are deducted and you are depositing. And for that, you are required to obtain a TAN number, that is TAN account number. So for the TAN account number, the process is as simple as PAN. Go to the income tax site, give the KYC details and obtain and submit an application for TAN. The printout is again required to be sent to the income tax department, and you are given a TAN account number like a PAN account number for deducting tax and depositing with the government of India. Income tax we are dealt upon. I have discussed the rates, etc. when we have talked about PAN. So there is another kind of registration which is required, not in all cases, but in certain cases. As I spoke to you, say about Agrawal Sweets or any kind of food business. So in case you are entering into a food business, you are required to obtain registration under FSSAI. This is a registration to ensure that food quality which is being sold by you is meeting the basic, basic grade of standards of food which is required for human consumption. So this is another kind of registration which is required. Now, GST registration I skipped there intentionally because I thought I will discuss in detail in this slide. So GST registration, let us talk about some basics of GST. GST is Goods and Services Tax. This act was introduced in India from July 2017. Registration under GST is not mandatory for everybody, but in case you are selling goods then and your sales exceed rupees 40 lakhs in a year, then the registration under GST is mandatory. And suppose you are rendering services. For example, you are a chartered accountant, lawyer, or you have a barber shop, any kind of services you are rendering. So in case of, or you have a photocopy shop, any kind of services you are entering. So in case your turnover is above rupees 20 lakhs, then you are required to obtain a mandatory GST registration. Below these amounts of 40 lakh and 20 lakh respectively, GST registration is not mandatory. In certain smaller states, mostly in eastern part of India, these threshold limits are 20 lakh and 10 lakh respectively for the goods and services. There are smaller limits for mandatory registration. But in most of the part of India, the limits are 40 lakhs and 20 lakhs. Now, what is to be done for registering yourself as a under GST? It is very simple. You should have a PAN and you should have a mobile number. You go to the GST site, click the icon of registration and put your PAN number, put your mobile number and send OTP. Click the button of send OTP. You will get a OTP on your mobile, and once you fill that OTP and submit, you are immediately granted a temporary GST registration number. Immediately on the screen, you get your GST registration number and you can start operating with that number. Now, this is your temporary registration. Now, after that, within 15 days time, you are required to complete the remaining formalities. What are the remaining formalities? Again, same. These are the KYC documents to be submitted online. You have to submit your photograph, your ID proof, your address proof, name of your business, in case you are into profession, a certificate of your profession, and the premises which you are going to operate is ownership documents, is lease document, permission from the owner that you are allowed to operate from that premises. As I've discussed you all KYC documents. So these are to be submitted online within 15 days of obtaining the temporary registration. And again, no need of physical application. You should have an Aadhaar card, put your Aadhaar card number, ask for OTP. Once you get the OTP and if you submit the OTP, the application is digitally signed by you and it is submitted online with the GST authorities. Now, within 7 days, maximum period of 7 days, GST authorities are required to deal with your application and grant you the GST registration certificate. So, the registration GST registration certificate is, in case they have any query, they have to ask that query maximum in a very maximum period of 7 days. If they do not ask, they have to grant the registration. Now, once the registration is granted to you, you are required to display the registration certificate at all important places of your business. Now, I have told you that the GST registration is not mandatory in case your turnover is below 40 lakhs or 20 lakhs respectively. But let me tell you, friends, the GST registration is indirectly mandatory because whenever you will do any business with any third party, they will definitely ask you that what is your registration number. So by practical process, you will be required to get yourself registered under GST. But let me tell you a economic advantage of this. Now, what happens because of the GST registration, the cascading effect of tax, goods and services tax is removed. Let me take an example and give you the economic advantage of registration under GST. Suppose you have bought certain goods for reselling purpose for rupees 100, and these goods are liable to GST, and the GST rate of tax is say 10%. So what happens actually when you buy this material, you are paying effectively 110 rupees. 100 rupees towards the cost of goods and 10 rupees towards the GST. So the seller of the goods, the vendor gives you an invoice of 110 rupees and you pay him 110 rupees. So 100 rupees he keeps in his pocket, in his bank account. 10 rupees he deposits with the government of India as GST. Now, if case you are registered with GST, then he will tell the government of India, this 10 rupees I have collected from Mr. X, whose GST registration number is this, and this is the tax deposited which I have collected from Mr. X. Now, effectively, this tax is collected from you and deposited in your account. So, tomorrow, when you are selling these goods for, say, 120 rupees, and when you are raising your invoice, so you will be raising an invoice for 120 rupees plus 12 rupees tax, that is 132 rupees. So, you have raised an invoice of 132 rupees and given it to your buyer. So he has paid you 132 rupees. So 120 rupees you are kept in your pocket and 12 rupees you are required to deposit with the government of India. Now, in case you are registered with the government under the GST, so please note the 10 rupees has already been deposited by somebody else on your behalf. So you will be required to deposit only 2 rupees now. So effectively what is happening? You have paid 120 rupees and you are getting effectively 130 rupees. So your profit is now 10 rupees. But assuming you are not registered with, your profit is 30 rupees. So suppose you are not registered with GST, then the 10 rupees would have not been deposited in your account by your seller, and you are not allowed to charge tax from your buyer. So you would have raised invoice for 120 rupees. You have already paid 110 rupees, so your profit would have been reduced to only 10 rupees. So against 20 rupees, your profit margin would have come down to 10 rupees. So for this reason, GST registration increases your profit and removes the cascading effect of taxation. Now let me briefly touch upon the returns also. If you are registered with the GST, whether you sell anything or not, you buy anything or not, you are required to file your GST return. Now, in case your turnover is below 1.5 crore, it is a quarterly return. If it is 1.5 crore to rupees 5 crore, it is optional. You can file a quarterly return or a monthly return. You have to exercise this option by going to the website of GST department. But if your turnover is above 5 crore, you have to mandatory file your return on the monthly basis. So there are 2 returns to be filed on quarterly or monthly, as the case may be, as applicable to you. One is the return of sales made by you. So it is called GSTR 1. By 11th of the following month, you are required to submit a online. You have to just prepare an Excel and upload that these are the sales made by me to people having registration number, and these are sales made by me uh, to the people who are not having registration number. The list which you give for people having registration number, whatever tax you collect, immediately it is credited to their account so that they are required to pay lesser tax. But whatever you file an Excel sheet saying that these are the people who are not registered with GST, so that tax goes to the department and no credit is given to anybody. So this is the first return of sales made by you. The second return is required to be filed by 20 of the following month, and which talks about how much sales you have made, how much tax you have collected, and what is the next net tax collected and tax already paid, net tax to be deposited by you. So net tax you deposit and file the return. So these are the returns to be filed by you. Now I move forward. So fundamentally, by now I have discussed most of the things required for registration, other than in case of a company, which I will deal with as I move forward. But in the meantime, we have discussed about sole proprietorship. Now I talk about the Hindu undivided family. It is a family business. It is something unique in India, that a family having its own assets, having its own capital, can do a business of its own under the caption called Hindu Undivided Family. This is governed by Hindu Succession Act. So you would have heard various bigger names like Birla, Godrej. All these businesses have started as a Hindu undivided family and grown into a great giant companies. Some of them are MNCs also. So a minimum 2 persons of family can start this business. The head of the family is known as Karta. The other members are known as co-partners. The head of the family has unlimited liability. All others people in the business, family members, have the limited liability. Whatever investment they are making, only to that extent they are required to contribute money. The business is controlled by the Karta. So, for doing a business under HUF, you are required to register your Hindu undivided family. For that, you have to create a HUF deed. HUF deed is nothing but a document that contains name of the business under which you will operate, who are the members of who is the Karta, who are the co-partners, from what address you will operate. Again, basically KYC documents, and who will do what kind of activities of the HUF. So all these documentation are, noted down, jotted down on a HUF deed, and this is registered as a document and notarized. So this document is kind of a legal document which governs the business of HUF. The other registrations are similar. I have talked about in detail. MSME registration, you can do online. Current account, separate fund is required to be contributed by Karta and other members in a separate account to be open for business of HUF. Shops and establishment registration I have discussed. Now, I think I missed one point in my sole proprietorship. In case you have as an individual your own PAN number, then for doing business, a separate PAN is not required. But in other than a sole proprietorship, in case you want to do a business, even if all the individuals joining the business have got their own PAN numbers, a separate PAN is required for HUF and other kind of businesses. So you have to apply for PAN of a HUF, go online, submit the details, submit the form, take a printout, send it to the department. You will get a PAN registration number under the name of the HUF. GST registration is again optional depending upon the threshold, but there are advantages of getting it registered. Business nature registration I've talked about, I'm skipping here. Now the next type of business which you can do is partnership. Now again here 2 or more people join the business. See, for 2 or more people to join the business, in case of HUF, they are required to be family members. In case of partnership, they can be family members, they can be non-family, they can be friends, they can be domain experts. A person having expertise in manufacturing, a person having expertise in procurement, finance, all these people can join hands and enter a partnership deed. It is called partnership deed, and document that how we will join hands, what funds we will bring, what work who will do, what are the resources we will be bringing in, and what salaries we will draw, what profits we will draw, whether we can draw some money from the partnership in between, for how much period this partnership will continue, whether it will be continued at will, means till we do not decide to close it, it will continue. So these are the points which we jot down and prepare a partnership deed. So it is governed by Indian Partnership Act. Minimum 2 people are required, maximum 50 people are required. It is a contractual relationship which is governed by the partnership deed. I have talked about it in detail. It gives the opportunity of various partners to combine their skill, expertise, domain expertise, to put their efforts or expertise to for the furtherance of the business. A single proprietor may not have all the he can be a jack of all, but he cannot be master of all. But in case of partnership deed, they can be people who are having different skills and joining hands together. So it is controlled by partners. I have talked about they jot on what all they do. But for the third world, the people with whom you are dealing, for those people, it is everybody is equally responsible. And as I go forward, I have written unlimited liability. All the partners in the business have unlimited liability to discharge in case the business suffers the loss. Now I come to the registration of a partnership deed. The registration of partnership is to be done with the registrar of firms, who maintains a register of firms. Now, once the partnership deed is prepared, KYC documents of all the partners are ready, you have to visit the office of the registrar of firms. This is not online. This is the only thing which you have to go and do it physically, and it is to be signed by all the partners and submit to the registrar of firms. Now, let me tell you. Okay, before that, you have to pay the required fee. The registrar examines the documents, annexures, and if it is satisfied, then he issues a certificate, which is a partnership certificate, uh, which is an authentic proof that your firm is registered. But let me tell you at this stage that registration of partnership is not a mandatory requirement, it is optional. But again, the benefits of registration are such that you will be having a tendency to get it registered with the registrar firms. What are the advantages? The most important point is that in case there is a dispute between the partners, or in case you have supplied goods to a third party and the third party is not paying you, then as a partnership firm, you cannot sue that third party. A firm is required to be registered with registrar of firms to enable it to file a claim case on the third party. So this is the biggest advantage. The partnership deed is required to be notarized. Actually, this is to be notarized before you go for registration, because registrar firm will ask for a registered partnership deed. Other points I am not detailing: MSME registration, current account, shop and establishment registration. You have to obtain a separate PAN for the partnership firm. Even if individuals have the partner, all individual partners have got their own PAN. A separate PAN is required to be obtained for the partnership firm. Gst registration threshold limits for registration are same. It is not mandatory below 40 lakh and 20 lakhs, but there are advantages of registration. Business registration I have talked about. Now we have talked about certain things till now which have the individuals directly involved. There is a sole proprietorship, there is a family, there are family and friends doing the business. Now I'm talking about a entity which is called joint stock company, which is an independent entity. It is independent from the sole proprietorship or partnership or people who are contributing money to start this business. So this it has nothing to do with the. I mean, it's a artificial person. It it buys assets at its own name. It puts its own signature. It is an artificial survey and operates with a common seal. Now let me talk a bit more on before you understand this kind of form of business. See what happens. Uh, I think before I get into all this concept, let me explain to you the concept of it. Suppose you want to start a medium to large business, and you may not be having money, sufficient money individually. So what you do is a few people, few like-minded people, or few domain experts, and also they do not want that beyond the money which they contribute to the business, they should have a unlimited liability. So they all decide that they will bring in X money, each of them, or they may be bringing different money. Some people may be saying, I am an expert, I will not bring any money, but I will see that the business is done in excellent manner. So different people join hands and they contribute money to the business, and the money contributed them by them can be of different amounts, and it is in the form of a term called as shares. You would have heard in your daily life share market, shareholdings. So what happens actually? Suppose the company has decided, a new company has decided to start business with rupees 10 lakhs. So it is not necessary that 10 lakh rupees should be contributed by one person. The company may decide that 10 lakh rupees will be contributed in form of 1 lakh shares of rupees 10 each. Now people who want to join this business, some people may be contributing only 10 rupees. Some people may be contributing 9, some other people may be contributing 9 rupees. Some may be contributing 10,000 rupees. Somebody may be contributing 90,000 rupees. So different people, according to the number of shares which they take and make a total of 10 lakh rupees, they have they have the accordingly shareholding in that company. These shares are normally transferable in the open market, but there are certain limitations I will talk about as I go forward. But the money to be contributed as capital or investment is actually divided into small shares, and these shares are obtained by various people according to their willingness to contribute to start a business. So, and these shares are transferable. So, suppose uh, 10 people decide that they will contribute, bring in different kind of denomination of money, making a total corpus of 10 lakh rupees, and they will start a company. And they have decided that they do not want to touch their personal saving. Whatever money they are contributing to the business will be only their investment. Now, these people are known as subscribers to the memorandum. What is memorandum? I'll talk about. But these people are subscribers to the initial issue. So they say that I will buy so many shares and I will contribute so much of money. So as I have talked about, it is under a Indian Companies Act 2013. It is a separate legal entity. It is an artificial person, and once the registration is done with the Ministry of Corporate Affairs, a certificate of incorporation is granted. How this certificate is to be obtained, I will deal with it as I go forward. It can own assets. It operates under the common seal. Sorry. The people who have contributed initial capital, they all may transfer their shares, but the company goes on. Somebody else who has bought the shares becomes the virtual owners of the shares of that company. So it has a proportional succession. It is normally operated not by the people who have contributed money. There is no embargo in people who are contributing money for operation of this company, but normally domain experts, director of finance, director of marketing, director of operations, director production, these are the people, or chairman, these people contribute. These are the domain experts of various fields. They constitute a board of directors and they run this company. These are generally large scale operations, and they require expertise of various skills for operation of the company. So there is no embargo from people who are contributing the money to become board of directors, but you can also get it run by independent experts becoming board of directors. The board of directors, sorry, the I'm sorry, there is something wrong. The people who are contributing money have limited liability. They need not contribute anything from their savings. This company being a separate legal entity, it can sue for the wrong done by somebody else, and or it can be sued if it has done something wrong. That suit will not lie against the people who have formed the company, but against the company. Now, once the company is being formed and you are independent of the company, there are various disclosures which are required to be made under the public domain. See what happens when the money is being contributed by public at large. And so they want to know how the money is being used. Who are the board of directors? Who are the shareholders? How much money, how much profit it has earned? What are the sales made by which? How much loss, profit? And what are the share transfers have taken during the period? So all these things people want to know at large. Also, the public at large, since it is dealing with a independent legal entity, they also want to know with whom they are dealing, how it is running the business, who are the directors, who are running the show, and whether it is earning profit, whether they have got good ethical practices. So, see, once you are registered as a joint stock company, the your information is available on website of the Minister of Corporate Affairs globally, and people in the other countries also can view that, and if case they want to do business with that, they can assess how you are doing your business and do business with you. So this is a very large advantage of joint stock company, which is registered as an independent entity. I'll deal with the subjects further as we go forward. So there can be various form of companies: private limited company, public limited company. So let us talk about public private limited company to begin with. So in case of private limited company, there should be minimum 2 people and maximum of 200 persons. So it should have minimum 2 directors and maximum 15 directors. Now, once the company is to be formed, it is required to prepare, like in case of partnership deed, a partnership deed, HUF deed. Now, in case of a company, you have to prepare a memorandum of association. Now, what is a memorandum of association? It contains what is the name under which you will operate, what is the place from where you will operate, how much contribute, how much capital you will be contributing, what are the objects for this company is being formed. They cannot do anything other than for what objects it has been formed. These are the broad things which are to be documented in the form of a memorandum of association. And normally you require help of an expert to create this document, because it is to be drafted in a legal rather quasi legal language, and it has certain disclosures to be made. uh, so all those people who have initially decided to start this company, they are known as promoters or subscribers to the memorandum of association. These all people are signing to this memorandum of association and submitting with the Ministry of Corporate Affairs for registration of the company. There is another document, technical document, which is required to be created. It is called Articles of Association. Now, this article of association contains how the company is going to be operated, how many directors will be there, how frequently directors will hold a meeting, when the meeting of the shareholders will take place, up to what extent the board of directors can borrow money from the market, uh, when the fresh equity is to be brought in, what is the total, you know, like various day-to-day operation. Uh, how many people should be present in the meeting, before the meeting, what is the quorum for the meeting. All these minute details are contained in the article of association, and there is a sample document also available with the Ministry of Corporate Affairs. You can adopt that, or you can get a customized article of association made for yourself with the help of an expert, domain expert in this side. See, next time, these memorandum of association, article of association, these are required to be submitted with the Ministry of Corporate Affairs. And once, uh, uh, I think before that, I should tell you something. Now, these subscribers to the memorandum of association or promoters, in case they want to be directors of the company also, uh, or the people who are likely to be initial directors. So I'm repeating this: initial directors of the company, subscribers or promoted to the company. Uh, these all people have to get themselves registered with the Ministry of Corporate Affairs. and obtain a director's identification number, DIN. They also, for obtaining the director identification number, they also should have a digital signature. So the application is to be digitally signed. They have to submit their respective KYC documents with the Ministry of Corporate Affairs, get their DIN numbers before they submit the Memorandum of Association and Article of Association. So they have to sign giving their DIN numbers. So slightly technical, but the steps, if you have understood, they are to be chronologically forward. Prepare a memorandum of association, prepare an article of association, obtain DIN numbers of all the directors, initial directors, and a digital signature, and have the KYC documents ready. File it to the Ministry of Corporate Affairs, and uh, the registrar of companies examines these documents and grants you certificate of incorporation. And once the certificate of incorporation is granted, a separate legal entity is created, and it is this single proof that you are a registered company. Other things I will go fast. MSME registration is similar. Current account opening, shop establishment. If it is a factory, then Registration Factories Act. PAN application, you should have separate PAN, GST, business related registration. So there can be another type of partnership under the Ministry of Corporate Affairs having limited liability. This is called limited liability partnership. The formalities are similar to forming a company. But instead of a memorandum of association, you have to make a LLP agreement, which is to be filed with the Ministry of Corporate Affairs, and a particular form is to be filled up on the MCA site for registration as a limited liability partnership. This is not very common in India, but this is generally formed for a specific objective. Suppose two companies join their hands to take a tender, and those two people are such that they jointly qualify for the tender. So they will form a limited liability partnership for that purpose and operate jointly. So other formalities are similar, and these LLPs or limited liability partnership have limited liability. The new Act, 2013 Act, also allows you to form a one-man company, which having one director, minimum one director. It can have more directors. Limited liability. Memorandum of association is to be prepared. Articles of association to be prepared, and other formalities are similar as in case of other joint stock company. Then I'm skipping this. If you want to register as a public limited company, now in case of a private limited company, let me cover that completely first. The 200 people who are joining hands, they are not allowed to transfer their shares. Though I talked about the shares are transferable, but there is something called share transfer agreement, shareholding agreement. The members decide that they will not transfer their shares to a third party outside world. In case they are required to exit the company, they will offer their shares to the other uh, shareholders, and they are having the first right to buy their shares. In case none of the existing shareholders are buying, then there is a clause in the article of association that it can be offered to third party under certain conditions. So, but in case of public limited company, you are allowed to take money from the public at large. So you need not be friends, you need not be family. You can create a document, a disclosure document, which is called as prospectus or RHP. So in this, various disclosures of how the company is going, who will be forming the company, who will be the directors, who are the people contributing money, what is their background, what is their objects, what is the projection of their income in future years, what is the likely that they will achieve these kind of targets. They are to be all certified by the various experts, bankers, to the issue, chartered accountants. So all these documents are to be incorporated in prospectus. They are to be verified by third parties, and they are to be put in the public domain for people to watch for a number of days before the public subscription of money starts. So public at large is contributing money. Those who do not know you, they just see whether this company would be, beneficial. So So I think you would have heard that this company is issuing coming up with a public issue, so people are filling up forms and subscribing for shares. What you are doing, you are saying whether the company people are good or the company is transparent. So then you decide to subscribe. This public limited company should have minimum 3 directors. In case the shares are listed and the public at large is allowed to buy shares, then there should be independent monitoring directors put on the board of directors. The memorandum of association is prepared, article of association is prepared, other registration formalities are similar. I would skip this. Now I am coming to the conclusion of what we have already discussed. The sole proprietor is required to have a self-declaration that is required. Then in no other case this kind of document is required. Then HUF deed is to be prepared, partnership deed is to be prepared in case of partnership. In case of all the kind of businesses, MSME, Aadhaar based registration is a preferred base of preferred registration, which is of lot of help, as I explained to you. All type of businesses should have a separate current account to be opened. Registration shops and Establishment Act is mandatory. In case it is a factory, then registration under Factories Act is additionally required. All type of businesses have to have a PAN, separate PAN. In case of sole proprietorship, in case the individual has his own PAN card, separate PAN card is not required. GST registration is possible. It is not mandatory. Threshold limit and advantages are to be seen. Then income tax, PAN number is to be obtained in case of all the businesses. And in case your income exceeds the threshold limit, you are required to file income tax return. Business related registration is required in case your business is such that requires registration. In case of companies, private limited company, public limited company, LLP, and one-man company, the MOA and Memorandum of Association and Article of Association are required. And number of directors for private limited company, minimum are 2, public limited are 7. And in case of private limited, there is maximum limit of 15, but there is no maximum limit in case of a public limited company. On the liability side, the sole proprietorship and Karta have unlimited liability. Partnership, in case of partnership, partners have unlimited liability. In all other cases, the liability is limited. The registration requirements are very minimal in case of sole proprietorship, HUF, and partnership deed. There are, there is a ease of borrowing money in case of limited company or the joint stock companies. Public can contribute to the capital only in case of limited company. In case of private company, only in-house people can contribute. I mean, the known people can only contribute and they cannot go to public for raising money in any kind. Then this is covered. Then you need some technical guidance for formation of a company. With that, I stop my deliberation and I leave the forum for the organizers. In case there are questions, I will take them. Thank you so much.
Sir. Friends, if you have any questions regarding registration, please do come up with the questions. You can raise your hands.
बढ़िया, आप कैसे थे? बढ़िया, मैंने सोचा तुम लोग नाराज होगे तुम्हारा।
सुमिता, you please mute yourself.
कर दिया मैम, कर दिया।
Yeah. Thank you so much, sir. I think they have understood all the registration process. शेखर सर भी आ गए हैं।
नहीं, अभी लग रहा है कि उनको जो है ना, अभी प्राइवेट लिमिटेड कंपनी, प्राइवेट एक यार LLP कंपनी स्टार्ट करना है। That's true. Those who are ready to do that. रवि जी नमस्कार।
नमस्कार सर, कैसे हैं सर?
बिल्कुल सर, बढ़िया है। So I was listening to you Very
you, sir.
impressive.
Thank you, sir.
That's a very big value addition to the participants.
I was trying to assure all of them that there is no hassles nowadays. The government has made most of things online, and things are very simple. If they are determined to do business, they just go to these kind of websites and do their registration. In case they have any difficulty, they can call me. I'll be of help.
That would be so nice of you, sir. Yes, Priya.
Sir, I request Chandrasekhar sir to give away the certificate of appreciation to Sehgal sir.
Thank you very much, Ravi sir.
Thank you, sir. Thank you for
this is the award from our side.
Thank you
A
so much,
certificate
sir.
of appreciation.
Actually,
for the valuable contribution that has been made by you.
I feel very happy by being able to share my thoughts with the young